Hi, my name is Tong. I'm the restructuring analyst you requested. So, you wanted me to go over a couple of things with you and advise you about the sale of the Excelsior. So, I'm going to talk about the fair value of the building as of January 1st, 2022, which is when the proposed sale is going to go down. I'm going to talk about the sale itself, some of the disadvantages and the advantages, and as well as the overall financial condition of your company. So let's start with the fair value. You bought the Excelsior for 100 million and it depreciates 2 million per year. Since you bought it in 2018, it's going to experience 4 years of depreciation by the 1st of January. So we can do 100 minus 2 times 4, which is 92 million. Now let's look at the sale itself. So as I said, the fair value of the building is 92 million and you're only getting offered 10 million for it. So that seems way under what you should be asking for, and it doesn't seem like it's worth it. Now let's look at the other factors involved. So if we take into account, if we're looking at the loss on sale of the asset, so this is all values are in millions of Canadian dollars, by the way. For simplicity, if we're looking at selling it on January 1st, this would be the journal entry for the sale. As you can see, the loss on disposal or loss on sale is 82 million, and that is a pretty significant number. That's a huge loss. At the same time, if we do sell it on January 1st, we're getting no revenue. In 2020, the Excelsior lost 500,000 if we're looking at the revenue and the expenses, right? So if we sell it, and it's projected to earn more, so if we sell it then we're not going to get any of the revenue. But on the other hand, there's also no expenses to worry about. So now let's take a look at the journal entry for retiring it on 2028, or at the end of 2028 if we wait. So as you can see, after we calculate out the depreciation, the loss on disposal is 80 million, and that's not that much less from if we were to sell it. That's only 2 million less, right? Now if we do wait, we do get revenue, and the revenue in 2022 is projected to be 4 million, right? And that's equivalent to the operating expense also of 4 million. Now if we assume that we're gonna maintain a continuous operating expense of 4 million because from 2022 out we're anticipating more stability, and we anticipate the growth of our revenue to be 2% per year, because it's 4 million in 2022. In 7 years, adding everything up, we get $30 million in revenue and 28 million in operating expenses, and that provides us with 2 million in profit. If we subtract that profit we get from the loss on disposal when we retire it, so 80 minus 2 is 78 million, that revenue doesn't have that much of a significant impact on the loss on disposal, and we're still losing out on quite a lot of money. We also want to consider that even though we're anticipating it to be more stable, with the current situation as it is, the housing market, and just with COVID in general, or not housing, real estate, and COVID in general, it's really volatile. And although we anticipate our revenue to be like this, it's not necessarily going to be the case. Now, if we look at the revenue we get from waiting, 2 million in 7 years isn't that much, since it's only, if we divided 2 by 7, it's only around 286,000 per year, when your other buildings are making 10 million per year. So this is a pretty insignificant amount compared to your other profits, which means it's not really worth it to wait. And as I mentioned, with the volatility, having a $100 million building sitting around, not really making too much money, is a pretty big risk. So with this risk, I'm going to talk about your overall financial condition of the company, and it's mostly because of COVID, but it's in pretty rough shape. So you have 200 million in debt with a 5% interest per year on that debt. That's $10 million per year, which means if you're not including the profit or the revenue from the Excelsior and just looking at the other buildings, that means you're breaking exactly even. That's pretty risky, especially with how volatile everything is going on right now. So yeah. Now, when we're looking at it this way, then the Excelsior is really the only thing that's keeping your company from going under, right? However, the Excelsior is already 500,000 in the hole as of 2021. Now, I get that it's because of COVID, but the income we're projecting is only increasing marginally, 2 million, right? 2 million subtract the 500,000 it loses it loses is only 1.5 million. And the majority of that income is going to be gotten from the end of its lifespan, right? As soon as it gets anywhere more than around 500,000 per year, that's already almost 2028 and you have to retire the building. So yeah, it doesn't seem worth it. All in all, I would definitely recommend selling the building because the loss avoided by waiting until 2028 is pretty negligible. You're still going to take a huge loss, and getting cash is really important right now to stave off any unforeseen circumstances, right? Just in case you have some cash, 10 million, it's not a lot, but it's still enough to pay off 1 year of your interest, right? Maybe if something else fails, you have that cash to do that. So yeah, let me sum over. I'm just gonna, in closing, sum up what I've gone over. So the fair value of the building is 92 million, which far exceeds what you're getting offered, but you're based on the situation right now, you're probably not gonna get that much of a better price. I would still try to negotiate, try to get a better price, but it doesn't seem likely that you're going to get anywhere approaching 92 million because no one's really looking to buy a building for that price right now. Looking at the sale itself, you're going to take a loss of 82 million. And if you wait to retire it, you're going to still take a loss of 80 million, which is only 2 million less. It's not very significant. The revenue you'd get from waiting is 2 million, but since you're already 500,000 in the hole in terms of revenue from the Excelsior itself, that's also not that much. And yeah, overall, the financial situation of your company, you're only barely breaking even with your expenses. So yeah, taking the extra cash is really important to fix that up. So that's it for me. If you have any questions, my email is always open. Just shoot me one. And yeah, I wish you the best of luck in the future. I'll see you later.